Thank you. Thank you so much. And hello and welcome, friends, to this 9th Alternative Investment Summit. First of all, let me kind of begin by thanking Equalify and the team that is putting together this initiative. I mean, to get all the interested stakeholders of the alternative investment industry, whether they are investors, wealth managers, advisors, money managers, on a common platform to share ideas, views, insights is tremendously beneficial to this fast evolving industry. So thank you, Equalify and team, and we are certainly very proud to be part of this initiative. I think let me begin by saying that, we are all noticing that today we are indeed living in very interesting times. The laws of finance and economics today have been altered by the overdose of monetary intervention by the large economic central bankers. Of course, this is influencing the trajectory and volatility of several asset classes. As people who are interested in financial assets, we need to pay attention to the world that we are in today. We must recognize that we are no longer in a normal financial world. Something has changed. Therefore, past cycles will not be a good indicator as to how the future will evolve. Right? We are clearly in very uncharted territory. Now, several financial assets today are becoming more and more macro-driven and are very tightly correlated. So if you ask an informed financial observer, the lament is that moving forward, returns are likely to be lower and volatility is likely to be higher. And when I speak with investors today, they tell me that they feel very challenged, by this low returns from fixed income, given negative real rates, which have been persisting, for a while, and feel that traditional investments are no longer adequate to profitably navigate this new world. They want to broaden their spectrum. So on the one hand, they want to participate in this rapid wealth creation that is taking place by disruptive technologies in startups. And on the other hand, they want better risk management strategies that offer an attractive return yet can protect downsides. They're looking for greater diversification to their traditional portfolio. So investment approaches, which squeeze better risk-adjusted yields, if you may, or higher capital appreciation opportunities. Basically, they're looking for uncorrelated returns in this correlated asset class world. They are looking increasingly for alternative asset class. That's really what they are saying. Prepare for this alternative investment industry to become mainstream. I mean, that's the requirement given the world that we are looking at. I'm not much of a betting person, but if I had to take a bet, it would be that the Indian alternative investment industry is poised for rapid growth for the next few decades, in fact, if not longer. The Indian IAIS industry, as I understand, is now about 5 lakh crores across Cat 1, Cat 2, and Cat 3, serving startup funding, private equity, private debt, pre-IPO, long-short funds, etc., etc. I would not be surprised if this grew multifold in the next decade. So, I also think that it's in everybody's interest that the AIF industry evolves. I am a money manager myself, and I can tell you that this format allows the manager to bring his or her skills, talents, entrepreneurship, to bring a new idea, a new format to manage money, or a higher level of energy to add value to an investor. There is a sharper degree of specialization also brought in by the money manager. For the investor, as I said earlier, the opportunity is to find uncorrelated alpha and benefit from the talent and specialization that a money manager offers. For the wealth manager, as in ETF investing becomes more mainstream, his skill and advice to identify relevant solutions for the investor will become even more important. Now for the challenges and responsibilities part. So what I see as challenges is, when I said one gets to freely demonstrate one's talent as a money manager, it also means the alternate approaches offer greater discretion to the money manager. This discretion will mean a fear of greater dispersion in returns from the past of the same money manager or between the same type of funds. I'm hopeful that as we build longer track records and as we have more players join this ecosystem, investor comfort and investor allocations will see a significant jump. The responsibility also means challenges of clear communication of your money management strategy and setting the right expectations to the investor. A greater variety means nuanced money management styles and DNAs of money management. All of this requires more and clearer communication. I also believe as an industry, we need to standardize information reporting to draw comparisons. Our responsibility includes putting in as much information as possible on fees, expenses, taxes as possible in an investment in communication that we make or presentations as much as is possible. I would draw inspiration from the Indian mutual fund industry, which has been able to guide the investor temperament towards investing over a long period of time. Not surprising then, SIPs are becoming a consistent part of the inflows. So folks, there is no question that we are staring at a bright future for the alternate investment industry. I look forward to learning a lot from each one of the panelists here. Again, welcome to the conference and thank you very much. We are extremely proud at ITI Long Short Equity Fund to be part of this initiative. Thank you.